Hello guys, I am Kunal Shah on behalf of India FinTech Forum. I would like to welcome Mr. Satyam Kumar, the CEO and co-founder of LoanTap. Mr. Kumar has been in the banking industry for the last 19 years and has worked with major banks during this tenure. Welcome to the interview, sir.
Hi Kunal, and greetings to everyone, all the viewers.
Thank you, sir. So moving on to the question, sir. So prior to LoanTap, you were the national head of mortgages at IndusInd Bank. Please tell us more about your journey from your position as a national head to being the CEO and co-founding your own startup, LoanTap.
Yeah, the only thing that can explain is passion and passion for retail assets as a class of product. So, be it a loan against property, mortgages, home loan, personal loan, or a card, it comes under the larger banking umbrella of a retail assets. And within that domain, I've spent almost 2 decades now. So it's a hardcore passion for creating good products, good customer experience, innovating the distribution channel, which ultimately led to formation of the LoanTap. So from my perspective, nothing changes. We still continue to do a better distribution. We continue to do a faster loan deliveries and better customer experience. And as far as the product itself is concerned, yeah, there is a big change from doing a large ticket loan, which is about 8 to 9 million per ticket size to less than a million ticket size, so like 0.1 to 0.3 million ticket size, so 1 to 3 lakh or 1 to 5 lakh kind of a loan. So yeah, there's a change, but I guess it was also to do with adoption of technology to see how it solves the problem of individuals like you or me. So essentially, I have been salaried earlier also, so we saw the salaried problem very closely. Besides underwriting, so we have been underwriting salaried people. At the same time, we remained salaried for most part of our career, and it was a inherent need to solve the problem of the larger salaried class.
So that's excellent, sir. Thank you for that, sir. So moving on, so what is the new normal at LoanTap currently, and so what do you think is going to be the new normal globally in the fintech ecosystem or the lending ecosystem?
Yeah, so from a lending ecosystem point of view, yeah, we never expected that work from home will be so smooth and it could be so efficient. Despite being a fintech, we all used to come to office and we all used to have so many of travels, face-to-face meetings, and all. This last 4 5 months has given a very new degree of it has been a paradigm shift for most of us, where we have been able to get into a quick meeting, quick calls across the locations, solve problem, do a customer meeting, do a lender meetings, and everything. So from that point of view, we see it very efficient. And so from a LoanTap point of view, also now we see that we'll be able to have at least 25 to 40% of our employees working from anywhere, and in some categories there will be 100%. In some categories, it will still have a rotational and a flexibility. So flexible working patterns, work from home. That also means slightly rigorous monitoring, because when you come to office, see each other, then you know that people have been working. So all you do is a end of the week or end of the month review of the project or statuses when it was supposed to be delivered. Now it's more close monitoring, because you don't get to see the people, so you do not get a offhand feeler that how the project has been moving. So kinesics are missing, so more review, but close watch. But otherwise, it gives a very different kind of a dimension to people who have been comfortable, who have to take care of family, who want to larger responsibilities, who have back home. So yeah, it's a class of both. Nostalgia of the older working ways of slogging it out 24/7 in office, and now again working 24/7. But yeah, in between there could be pause. So it's a good way and good change.
So it has its pros and cons, sir, in the larger picture, if we go to see this as a complete bucket.
For LoanTap also, for us, we have been very specifically city concentrated, top city players. Now I know that my customers are no longer only staying in Bangalore; they are also staying in far off suburbs of Coimbatore and all. So that also creates a city expansion list for us. So the same customer who was earlier clustered in pockets of Bangalore or Delhi or Pune, all of a sudden they're everywhere. So there's need for us to go everywhere and more need for digital.
So that's a great thing, sir. But so then, so the moratorium is viewed as a blessing for the general public. But so how is it going to affect the lending institutions in the long run, or do you see any adverse effects on the economy because of it, or as a whole?
Yeah, no, so it has now it has been factored in. It has definitely created a challenge for all lending communities. And initially we do not expect, but we did not expected it. But it's creating more challenge for the middle class. Middle class or the people who have been saving. So ultimately, the savings rate will be under pressure because a bank will fund it. They will fund it from one place or another place. So if the interest on interest and all this noise which is getting created or the portfolios not holding true because of the moratorium behavior of the customers and all, ultimately it will start reflecting in the book of the institutions, and so it has to be paid. So and it's a classic way where the government decided to nudge individuals and private sector to foot the bill for the decisions that they took in terms of the lockdown or stricter lockdowns and all. And unlike many other countries, the support systems to at the individual level or at the companies level has not been created by direct benefits by the government. Government has still focused on absolutely lower income group or marginal players. So yeah, the middle class will pay the bill. Somebody whose interest income on the savings will come down. Someone's stock will not perform as good as it should have been. So ultimately we are only custodian. We are custodian of money of investors, of lenders, and of individuals. So somewhere it all is individual. It's about a deposit and a lending. So we all are going to be impacted. NBFC look to be that, yeah, I mean, moratorium was a specific event which affected the working culture or the working cycle. So it was like a spanner in the wheels. So because of that, it created a momentary trouble for the NBFCs. But I think NBFCs or the banks have all factored it in. They have moved on, and so as an industry wise, the sector will be still less impacted than the impact that we are seeing in manufacturing and in many other categories like consumer goods and all, where the demand itself was a challenge. So here at some categories we have seen much difficult days. So lucky enough to come out with less of the bruises.
Yes, sir. Definitely, sir. Thank you, sir. So moving on, sir, in order to boost lending, the RBI has demanded lenders to, send a daily report of the loans that have been sanctioned and the volumes of these loans. So do you think this is an added task to these lenders, or do you think it is a right step towards, data collecting and using this data to improve loans in general?
From the task point of view, the core banking or the core lending modules have been very robust in the entire lending ecosystem. So providing the data is not an onerous task. We need to also understand from the regulators' point of view or the policymakers' point of view. Large sums of money has been eased out or provided into the system through credit programs run by RBI, and that is a way of achieving a growth in the economy or focused growth in the economy into certain segments. So like if the data on a priority sector lending, on SME lending, or the data under ECLGS or PCGS is not available to the government, it will be very difficult for them to understand what has been the impact, whether the liquidity which was supposed to reach to the place, whether it has reached or not. And in a current environment, the speed of decision making is of the utmost importance. So you can't rely on a 3 month or a 4 month lag data to make a policy making while you are in a pandemic. So I think the speed of information transfer was critical, and absolutely, I mean, no two view on the fact that this data it has to reach to the institutions on a fortnightly or a monthly basis for policymakers not to sit on it, because every passing day the loss to the economy is much larger. The loss to the job and the business losses are much bigger than shouldering a smaller responsibility of providing the MIS. So absolutely fair, absolutely fair.
Perfect, sir. Thank you, sir. So then, what are your future plans for LoanTap moving forward?
Yeah, I'm sorry, because of some network challenge, I missed the question from your end, Kunal. If you can just
Sure, sir.
repeat it.
Yes, sir. So, what are your future plans for LoanTap?
So LoanTap, our future plan has shifted by a year. We always wanted to go out and run for an IPO like any other NBFC. So one part of meeting the top line number for having an IPO of size shifts by a year. This year is more like a status quo. That's how we see it as far as the overall business growth is concerned. So the growth will be marginal. That essentially means in a startup ecosystem, it shifts the plan to run for an IPO by a year. However, it does give us lots of time to re-strategize, create a better customer engagement, create a better product and a customer flow in terms of customer experience. So that's what we have used, and we always wanted to go early on the bourses to showcase the ability of a fintech in terms of managing the business at a lower OPEX, managing the business with a better risk parameters, and managing the business with an efficient capital deployment. So yeah, it gives us a more room to showcase better OPEX, and also come out with as an organization which is COVID tested. Okay, it's like a acid test for many of us. So that reinforces the investor faith in the fintech ecosystem. So the pros and cons are there. I think the more supports, more good than bad in this environment for organizations like ours.
So I wouldn't agree less. I know that it's not only we as humans that are facing the COVID crisis, but there's a COVID testing for the companies also, just to prove that would they stand or will they be able to run in the future. So that's where, management helps a lot, just to see how we are planning the future. Just move from what we have currently rather than, that's very well put, sir. Thank you for that. So moving on to a last question, sir. So what is your advice for the young entrepreneurs currently in the field of fintech, and also for the young audience that is currently joined with us on our social media? Any advice from you during this pandemic?
Yeah, so I guess what we have seen in last 3-4 months is that the way demonetization accelerated the growth of payment infrastructure, digital payment infrastructure. We see the similar moment coming for lending fintechs specifically, and we see more collaborative environment coming together where the large balance sheet players are no longer looking at a fintechs as an adversary. They are coming forward, and there's a relationship of a mutual respect, where they feel that the distribution and the processing capability in an automated environment of fintech is something which they can use currently, while they are still facing challenges in opening the branches, getting employees to the places, and the fact that the need of or the nature of the products which is required in the market is also changing. So the products, certain asset class which was being talked only about 2 quarters back, that hey, this asset class will go through a challenges like a car buying or a car loan and all. Now all of a sudden people are looking for to more and more personalized vehicles to travel, or a long road trips. So it has given a very different kind of a strategical flip to the organization's thought process. So there's more room for agile ecosystem. That means there is more room for the fintech, where you can switch the gear, you can speed it up, you can switch the product, as long as you are coming more and more consumer centric. So the need for being consumer centric has never been felt more than what it is today. Whether it is in empathy way, whether it's in friction free delivery, or safe delivery, whatever we call, the time is more and more apparent for consumer centric solutions. And fintechs are the one who have been bringing, or they're capable of doing it at a retail level. So we have all started calling that it's a sachet moment for the lending. Okay, where you will have small loans, small installments, small problems being solved. And that is what has happened into the shampoo market or all other markets about 7 to 8 years back. I think that moment is there in the lending. So no better time to jump in now. And yeah, and the fact that, again, I mean, after the current event, you will get another good 8 to 9 year of a run to build an organization and create good amount of stability and all. So best time to jump in.
Thank you, sir. That was very insightful, sir. Sir, thank you for your taking out your time on behalf of India FinTech Forum and all the young entrepreneurs. Thank you for sharing your insights and your valuable time. Thank you once again, sir.
Thank you, Rajkumar. Pleasure speaking to you.